News outlets are filled with daily updates on the conflict in the Ukraine. But what impact is it having on commodity markets, and how might this impact investors in South Africa? I'm Mike Townshend, Portfolio Manager at Ford Asset Management. Both Russia and the Ukraine are significant commodity export nations. So as you'd expect, the conflict has had a dramatic impact on numerous commodities. For example, they supply more than 10% of the world's coal, aluminium, nickel, and palladium. They supply more than 10% of the world's requirements for crucial fertilizers, such as potash and ammonia, and are also major suppliers of wheat, barley, and even corn, or what we call mealies here in South Africa. Europe is critically dependent on Russian gas, and the country supplies close to 12% of the world's oil requirements. Since there are no ready substitutes for these commodities, this event has caused a significant dislocation in many markets, and the impact on prices has been dramatic. Nickel and potash prices are up more than 50%. Investors would have noticed the surge in domestic petrol prices, whilst European gas prices have trebled. These sudden price rises will have a rapid impact on inflation. For example, gas, which is used to heat greenhouses in the UK, will cause prices of cucumbers and tomatoes to rocket as farmers either cut back on production or pass on costs to the consumer. And logistics costs rise on higher fuel prices. The difficulty is knowing how long the conflict will continue and then how quickly supply lines can be resumed. How will sanctions affect this? There are lots of unknowns. When an international incident such as this conflict arises, it is almost too late to invest. One needs to be positioned beforehand, and all of our holdings have been in place for a while now. So how has this affected Ford's investments? In the domestic equity component, we do hold BHP and Anglos that are benefiting from higher coal, iron ore, and other commodity prices. We also hold a gold ETF and have a small exposure to a local platinum company. However, it is in our global funds, which are important building blocks for all of Ford's multi-asset class funds, that the opportunity set is larger. Here we have access to pure play copper, with Freeport being one of our biggest holdings, and companies linked to resource prices, but with less capex risk, what we call streaming companies. We also have significant exposure to businesses that will be major beneficiaries of higher grain prices. FMC and Nutrien, for example, are two of our fund's largest international holdings. These are up 30% and 50% respectively year to date. I must stress these holdings are underpinned by long-term themes and had solid growth prospects even before this war started. It is a dangerous strategy to try and trade short-term winners and losers given the massive uncertainties around war situations. We invest for the long term in solid companies that should deliver in most scenarios.